The final video for this topic of production is an activity on break-even analysis. Okay, they tell you that the business manufactures and sells scientific calculators, the owners and Mrs. numbers, and then you're required to do certain things. The first thing is to calculate the break-even point for the year, and there's the information that you're given. Remember, the formula for break-even is to take your fixed costs, that's this number here, 2,944,000, and divide that by the profit that you made, which is your 119 Rand selling price, subtract your 71 Rand variable cost per unit. And if you work this out here, you get 61,333 units that need to be made to break even. Question 2. Mrs. Numbers is satisfied with the number of units made and sold. Provide evidence with figures to support her opinion. You need to compare what you actually made, which is 64,000 units, with what you need to break even. So you're producing more than you need to make to break even, which means you're going to make a profit. So compare the number of units actually made and sold with what you should make to break even. If you're producing above, like it is this case, you make a profit, you are satisfied. Obviously, if you make fewer than the break-even point, you'll make a loss and you'll be dissatisfied. Then Mrs. Numbers is concerned that most of the workers are not committed to the business. Provide one point of evidence with figures to support her opinion. Okay, if you look at your number of units made and sold, last year we made 78,000 units. The current year you only made 64,000 units. So your production level has actually dropped, and that could be caused by workers not being committed to the actual business itself. If you also look here at your direct labor cost per unit, that has actually increased as well. So you're producing fewer units and your labor cost per unit is increasing. So that is why she's concerned. Only producing 64,000 units instead of 78,000 last year, and your direct labor cost per unit has increased. You must quote these actual figures here. And then the last question, fixed cost per unit decrease as the level of production increases. Briefly explain why this is the case. Remember, fixed costs don't change irrespective of the number of units that you make. So if you are making 2 units and your fixed costs are 100 Rand, your fixed cost per unit would be 100 divided by 2, which is 50. But if you can increase the number of units made from 2 to 20, then your fixed cost per unit, 100 divided by 20, would be 5 Rand. So because you're spreading fixed costs over a higher number of units produced, your denominator is increasing basically. That will mean that your fixed cost per unit, per item, will decrease. Okay, so that's been 4 videos on production, and that's all I'm going to do on production at this stage. When I move on later in the year to revision activities, then I will cover more. Alright, thank you.